Hello, good evening. Welcome back. This is your live weekly dose of real estate reality. I'm Jackie Baker. Thank you so much for joining me this evening. It's a beautiful spring night here in New Jersey. We are approaching summer, and which means we're also approaching, sorry, let me shut my music off there. We're also approaching June 1st. And if you haven't been watching the news or if you've been living under a rock, if you don't know what June 1st means, well, you got to get with it. So June 1st is the deadline for the government to pay back all this debt. And it's all over the news, like what's going to happen if the government defaults on their loans. It's not looking pretty. And they keep putting this out there that this could potentially happen. And Zillow has now come out and said, if this happens and they default, mortgage rates could surge over 8%. Oh my God. And then the housing market will crash. Oh my God. Well, is it going to default? We don't know. Probably not. But I thought it'd be a good topic to talk about this week. So I am so excited to bring back, yay, thank you so much. Here he is. Sorry, Greg. Here he is, Greg Wareham from Your Mortgage Process. Thank you so much for being back. I'm so happy you're here.
Thanks for having me, Jackie.
Hello, my God. I know I called you on here last minute, and I so appreciate you being here and saying yes. And I thought this is such a good topic for us to discuss because, as always, it's the news loves to sensationalize everything, but you sit back and you think about it. What if it does happen? What could happen in the housing market? Scary.
It'd be bad.
It'd be very bad. So let's I'm going to start off with the article. John, could you please bring it on up? Got my handy producer with us this evening. Okay. So here it is. U.S. default would send mortgage rates past 8%. Zillow forecasts mortgage payments would rise 22% in unlikely default. I love how they throw in there unlikely, Oh, wait a second. Greg, I don't know why you're muted there. Here we go.
Nope, that's me. User error.
Sorry. It's okay. All right, John, let's scroll down a little bit. I want to read this. Okay. The United States may be weeks away from defaulting on its debt, which could have a devastating effect. Mortgage rates could rise to 8.4%, and payments on the typical home could rise 22% if the nation defaults on its debts, according to an estimate by Zillow. Though a default is unlikely, Zillow senior economist Jeff Tucker said it could send the market into a deep freeze. It would be a blow to buyers and sellers alike after mortgage rates doubled over the course of last year to settle below 7% in recent months. Interest rate hikes spiked mortgage rates and, coupled with record home prices, sent an affordability index by the National Association of Realtors to a 33-year low late last year. So here's the thing. What do you think about this? I mean, you and I were talking about this before, Greg. I mean, the reality of this actually happening is probably slim to none. When I was researching today, a lot of analysts are saying like there's a less than 10% chance that this can happen. They're not going to default. Probably not. But look, there's always the what ifs. So what do you think?
Well, I mean, if we went through the what if on it, you'd likely see interest rates jump to 8.5 by September. So you had 25% reduction in sales. So you certainly would see a lot of turmoil in the housing industry. Mm-hmm. I think kind of bigger picture for me, when you look at the debt ceiling itself, it's not uncommon for the debt ceiling to be changed behind the scenes in Washington. What's changed so much over the course of the past 10 years is how publicized and politicized everything is.
Oh, yeah.
And this should just be going on behind the scenes, and they're changing it to update expenditures that have already been approved. Mm-hmm. So just a little backstory on it. So originally, Congress had put the debt ceiling into place way back when, like in the early 1917, I think is the year they put it into place to make sure that the government wasn't spending more than a certain amount of money.
Right.
Now, in today's world, kind of fast forward to today, Congress approved certain expenditures for this year. Now, you would think at the time they approved the expenditures that you'd make sure you have enough money for it,
You think?
right? What a novel idea.
Yeah.
And the reality is they didn't. So everything that's the ability to raise the debt ceiling today, all it's doing is it's giving us enough money to pay the debts that have already been agreed to by Congress.
Right.
So it's not new expenditures or new debt that they're trying to get approved right now.
Right. They just don't know how to they just don't know how to stop spending. So this is going to be interesting over the next couple of weeks. But hey, look, it comes up for good conversation because you know what? There's so much stress in the housing market. Let's just add one more thing. Let's just, throw this into the mix and really upset people and cause chaos and all that stuff. So now, John, could you scroll down a little bit more? All right here. Oh, wait, I'm sorry. Go back up. Go back up. Sorry. Okay, go ahead. Right there. Okay. I want to point this out too. If mortgage rates surge to 8%, Zillow forecasts existing home sales would drop 23% from 4.3 million in April to 3.3 million in September. A major economic disruption could upend activity and borrowing costs just when the market was beginning to stabilize and recover from the major cool down of late 2022. All right, John, can you scroll? Thank you. A debt default, however, ties more closely to rates and would also cast a dark shadow over the broader economy. The dire scenario could be avoided if politicians come to an agreement to raise the debt ceiling before the end of the month. Joe Biden and Speaker of the House, Kevin McCarthy, both have a June 1 date on their minds, but no agreement has been reached. So, yeah, let's just face it. We're going back. We're going to be down to the 11th hour, last second. And there's a comment here. They won't default. This happened before. I know. It probably won't. But the reality is we have to look at what could potentially happen. Because honestly, I don't trust the government. And as a lot of people don't. So I don't know. I think it's something that we have to consider. Anyway, what do you think, Greg?
I think it's all political jousting.
Yeah.
So, on the Republican side, Republicans want to make sure that they iron out certain things going forward from an expenditure standpoint to approve the raise of the debt ceiling.
Right.
On the Democratic side, what they're saying is, well, isn't that a separate conversation that we should have next time we get budgets approved? And why do we have to do it right now? So it becomes this game of political toggling back and forth.
Right.
But at the end of the day on it, you can't default on the debt because that means that you stop paying Social Security checks. You're not paying the military. You're not paying our creditors and all these countries around the world and domestically and banks that we've issued bonds to. Like you really can't. We're the biggest economy in the world, and we can't default on our debt. Well, never say you can't. Anything's possible.
Anything is possible. I know. It worries me. But as a real estate agent, when you see this stuff come on, you see this online and then your clients see it, or just like, the general public sees it and they start freaking out. And it's even more reason for people to say, I don't want to buy a house right now. Look what's going on in the economy. I get it. But why do we have to add more fuel to this fire?
I couldn't agree. We were talking off camera before this about some of the changes to credit, the media coverage of it saying people with good credit are going to pay higher interest rates than people with bad credit.
Yeah.
And none of that's true, but it just seems like the way things are publicized that it kind of just further tries to divide everybody.
I agree. 1,000,000%. I totally agree with that. And like I was saying before, I've had a lot of people, a lot of my buyers have just been sitting on the sidelines, and it's now everybody's looking to next year. Now it seems like the 2024 is going to be the year of hope. where they can get a home. I mean, I don't mean to laugh, but it's like we thought this year would be it, and it's not. It just feels like oh my God, it's one thing after another after another. And you said mortgage rates today are about
Yeah, they're
6.5%.
about 6.5 right now.
Okay.
One of the interesting things, and where it gets, with people waiting to buy a house, we've talked before, and I'm sure you've talked plenty of times on the show. I don't think there's going to be a huge market correction anytime soon as to the cost of real estate. But I just don't. When you look at people renting right now, when the inflation report came out and inflation came down to 4.9% at the
Mhm.
target of 5%, that's year over year, which is the lowest level since April of 2021.
Right.
One of the things factored in there, some things went up and some things went down.
Hmm.
What went up were rents.
Yep.
Rents were one of the things that went up, as did used cars and gasoline, a handful of other things. But when you hear that, you go, gosh, even in a market where we're getting inflation under control, the cost of rents are still rising at a very high level. And I'm of the position that home ownership and home buying, you can't time the market perfectly. And who knows where it's going to be next year? I mean, rents have been increasing since 2000 at 6.2% per year, every year, where the appreciation of housing is increased at about 4.5%.
Right.
So although the house values are going up and the cost of buying homes are going up, they're not going up as high as rents.
Right.
And that concerns me going into the next couple of years as people wait. Do we continue to just get more priced out of the market?
Exactly. Yep. I can't. Oh my God. Speaking of getting priced out of the market, John, pull up this comment from Phantom Games, the second one. Look, check out this. Check this out, Greg. Phantom Games. Did you hear a home in Clifton? This is Clifton, New Jersey. Got 120 offers and sold 150,000 over asking. I'm not surprised. Clifton, I think, was one of those towns where you could get somewhat of an affordable home, and now that's like the new area people are going to. It's like, oh, okay, you got homes between 400,000 or 500,000. That's my price point, and this is what's happening again. Like we were just saying before about Ocean County, Greg,
Yeah.
right? Ocean County was fairly affordable, and I've had Jim Flanagan on here a number of times from Tom's River. And he said, now, you're looking at Tom's River and Ocean County, like 400,000 easily.
4 or 5, even
Yeah,
4 has become on the really low end where they're getting closer to 500,000.
exactly. Exactly. And I said this last time, New Jersey, especially, we are such a unique market because we still have the New York factor, right? The New Yorkers still moving here. I still get people reaching out to me all the time from the city that want to move here,
Yeah.
and I'm like, oh my gosh, it's not stopping. I mean, it's great. We'd love to have you, but it's so darn expensive now. And a lot of these New York City people, a lot of them have money and they can pay these prices. So
Yeah,
I,
it's challenging in New Jersey because we're the most densely populated state in the country.
right.
I have a question for you, a trivia question.
Okay.
So, per square mile in the state of New Jersey, how many people do you think live per square mile?
Per square mile. Oh, that's a good one.
I couldn't get over how big the number was. I was surprised.
Oh God, do I want to know?
I don't know.
What?
Well, I'm going to start here. So, and this is a conversation that came up with my son. I have 4 kids, and my youngest son is on his driver's permit. We're driving around. We're
Yeah.
talking about where's the worst place to live in the country, and we both decided it was Wyoming.
What?
And one of the big reasons for it is for every square mile, only 5 people live in every square mile. So
Oh
we started
wow.
thinking about it, like, what's New Jersey? New Jersey is over 12,000 people per square mile in the state of New Jersey.
Whoa. Are you serious?
12,000, most densely populated state. So when you look at it for real estate,
Wow.
there's only so much new construction that can go up to
Oh yeah.
accommodate the people. And
Yeah.
when you look at the influx, to your point with it, Jackie, people coming from New York, it's hard to see in any time in the near future there being any type of surplus of housing to drive prices down.
No, they're definitely not, especially here in Jersey, but even nationwide, we're still the inventory. I mean, I think now we're short like 5 million, 6 million homes, something like that. I mean, and the builders are still, they can't get these homes built fast enough. And somebody had said last week that it cost a builder about $67,000 in permits now.
Wow.
All the fees that they have to pay towards the local governments and the federal government to get these things built. It's like, oh my gosh, like I just feel like every bad thing that could be thrown at this situation is constantly being thrown at. And it's like, when is this ever going to change? I would love to go back to pre-2020 and have I'm sure you would too. I mean, it's just so challenging. So, I don't know. It's ridiculous. So Johnny, we have some other questions or comments on here. Can we, Phantom Games, I say ban New Yorkers from moving to New Jersey. Yeah, you try that. And we got Brian back. Hey, Brian, welcome back. Around what price range of home have you seen the most offers or bidding war? You mean what price? It honestly, Brian, it does not matter. I've seen homes I listed a home once for like I want to say 358 or something like that. And I think it went like 80,000 over, but then I helped buyers buy a house that was in the 800 range and they paid over $100,000 for it. It doesn't matter. It really doesn't matter if a house is priced well, right? If it's in that person's budget, it's priced well, and it shows well, it's in moving condition, it's a good house. That's what happens. Everybody wants it, and that's what's driving the price up. So, what else? Oh, Brian has another question, John. How much did the price drop in New Jersey during the 2008 recession? Do you know that answer, Greg?
Yeah, it was county specific, Brian. So it really depended on where you were at in New Jersey. When you start getting into some of the less densely populated areas, like Sussex County, New Jersey, as an example, there were pockets of Sussex County where you literally saw a 35% drop in real estate. And it took that 10 years for that real estate to come back.
Yeah.
But then when you start getting into areas like Bergen County, more densely populated, more accessibility to the city, I'd say you probably saw about, on the high end, maybe a 20% drop. So location had everything to do with it.
Right. Now that took a long time to get through all those foreclosures. A lot of people went under during that time. So that took. I mean, there's a lot of foreclosures that went on, even in New York too. At that time, I was living in New York, and oh my God, our friends lived in a brand new community. They just bought in 2006, right? When things were at the height. It was a brand new community on the Hudson River up in Rockland County. And after that whole thing blew up, I remember going down there and seeing notices on the front doors of these places that they were being foreclosed on, and people were being evicted. And oh my God, that was so scary. And our friends lost money on their house too. They paid a lot, and then they ended up selling it way under value. So, yeah, God, we can't do that again. That can't happen. We can't let that happen.
Yeah, and you just think the math of it doesn't allow for it, because the set of circumstances then were so different.
It's true.
Right now.
True. They definitely were. But if they default, though, if the government defaults,
that's true. Greg. That's a deep real estate freeze if the government defaulted.
Hey, look, I say never say never, but the chances are, we know the chances are it's probably not going to happen. But another thing I wanted to show that was something else interesting regarding this whole default thing. Now, it says here, this is from, I forget the website I got this from, but it says, what would happen if the government defaults on its debt? Hey, Johnny, could you scroll down a little bit? Because I'm going to show the difference here between, we have technical default. Okay, so technical default, this is the first scenario, is a technical default, which is defined as an extended period of non-payment of some or all U.S. financial responsibilities. Based on a shock model, technical default would double the current unemployment rate of 3.4% to near 7%, tip the economy into a recession within 6 months, and following a short bout of disinflation results in a more persistent bout of inflation accompanied by a deterioration in the fiscal condition of the economy. So that what they're saying is am I understanding this, that they're going to, if they like delay, right? If they're delaying the payment, which is for an extended period of non-payment. Am I reading that right, Greg?
Yeah.
Okay. So the actual default, John, could you scroll down a little bit again? You're doing so good, John. Thank you. An actual default. The second scenario would be the actual default, in which the government, out of money, stops paying its obligations. It would be an unfettered economic catastrophe. Our model indicates, gee, do you think the world's going to end? Our model indicates that unemployment would surge above 12% in the first 6 months. The economy would contract by more than 10%, triggering a deep and lasting recession, and inflation would soar towards 11% over the next year. If that doesn't wake our government officials up, I don't know what will. I don't know what's going to get that. It's just like, come on, stop playing the games,
You know, the other thing that doesn't even show. So you look at the bank, Silicon Valley Bank that had failed, or the bank that failed out in Silicon Valley.
Yep.
So one of the reasons that defaulted, or the big reason, is because they had all these U.S. government treasury bonds.
Right.
They had a lot of cash coming in to their bank. And when you don't have enough, when you have so much cash, you can't lend it all out.
Mm-hmm.
They take it and they invest it in federal treasury bonds, right?
Yep.
That were yielding the 1.75% return on investment.
Right.
Well, when they didn't have the cash flow coming in, they said, we got to raise capital. So they went to go sell those bonds. Well, the challenge is those bonds are yielding 4% right now. And in our portfolio, they're 1.75%. They're 50 cents worth 50 cents on the dollar.
Mm-hmm.
So they said, we can't do that. And then they went to the market and said, we need to raise capital. And that's when there was a run on the bank and the bank got shut down.
Right.
If the government defaulted on their federal debt, it would be a disaster in the banking industry, because a lot of banks have investments in those treasury bonds. And everything behind the scenes is very hedged, right? You're hedging other things with these assets that you have in federal debt. If that federal debt now isn't a AAA rated bond, and now it's a triple B, it's a mess.
Oh God. Let's please, let's not go there. Let's not go there. Getting agita just thinking about that. But there's been a few other I want to say bank failures or that's happened since then, since Silicon Valley, right? We had the First Republic. Wasn't there another one recently that just, I want to say First Republic? Was that one?
Well, First Republic, and then the big one was, I believe it was Credit Suisse that ended up getting purchased by UBS.
Yes.
Which no one really talks about that one.
Why?
I think it's because it was so big. Because when Credit Suisse was a $1 trillion bank.
Yeah.
They weren't, Silicon Valley were worth a couple $100 billion. This was like a major world bank. Yeah. And really the Bank of Scotland insured that deal and made sure it got done. And they actually gave a lot of money to UBS to ensure that deal got done.
Okay.
That would have caused that causes global issues if a bank of that size go on. It's like the same size as Wells Fargo. Like that's the kind of size of bank from an asset standpoint you were talking about.
Right. Oh my God. Yeah. Please no more bank failures, because that's just going to freak everybody out again. Sorry, my phone. So, all right, John, you know what? Let's, I want to bring up those comments. So I'm adding another, I like to change things up here every week. So I have comments. I go through the comments every week on the channel. And last week I put out the video about how there was a decline in new listings. And it was like a 22% decline in new listings in the month of April. And how how the inventory is it's a disaster right now, because people don't want to sell and give up the low interest rates, hence the golden handcuffs that I like to use that term a lot. So, John, can you pull up those comments for me, please? Okay. This is a comment from somebody who said, keep up the good work. Hey, thanks. My thought is that a house will become a luxury product similar to other countries or cities. Unless multi-generation or extended family combine their income, owning a house will continue to be more difficult. This housing issue will resolve once the 2 to 3% mortgages mature. The federal government has caused a housing problem for the next 15 to 30 years. Greg, what do you think about that?
Well, I understand the perspective of that. I don't know that, in my opinion, I don't know it's a 15-year problem. You know, a lot of people would say if interest rates get back down to 5% or even 5.5%,
Yep.
the people that are currently at 3.5%, that's a palatable number to
Yes.
sell your house and buy something else, and that should
Yes.
increase inventory.
Yep.
So I don't know that it had that they hey, if they created a long-term problem, if interest rates stay at 8%, 7%, yeah, I mean, I think then you have a long-term problem. But I don't necessarily know that's what we're going to see over the
Right.
course of the next couple of years.
Right. So speaking of mortgage rates for this year, okay, we're at 6.5% now, and a lot of experts were saying beginning of the year it could be end this year at 6.5%. Some were saying it could fall down into the fives, low fives even. Now with the CPI that came out on May 10th, we were talking about that before. Um, that that didn't really do that much as far as interest rates are concerned. Now, aren't we going to be getting that CPI again? Like, won't that come out again? And will that?
Yeah, we'll get it again. If we see a trend of rates going down, excuse me, as inflation dropping,
Yeah.
then you'll see the. Yeah, we're not going to see. I don't, or at least I don't think that we're going to see a reduction to the Fed changing their interest rates. Really, what the market's playing for is no more increases.
Okay.
So if we see inflation continuing to dip, at least the Fed will stay stable, which will
Right.
help with the bond pricing, which helps with long-term interest rates.
Got you. Okay. Yep. No, that makes sense. Yeah, that's right. Because I read that too. They're putting a pause on raising the rates for the rest of the year. Because I saw when last week when the CPI came out, I read somewhere that there was the thought that they may go ahead and raise rates again. I'm like, are you kidding? You got to be kidding me. It's got to stop. Like,
It really does. I
I
mean, if the bank failures weren't a good enough signal, like that
I
was the one to me in looking at it, Jackie. It's when the banks start failing because they had bought treasury
mhm.
bonds or treasury bills and now they're not worth any money. It's kind
Yep.
of a good indication. Maybe you raised them a little bit too fast
Yeah.
and you got to kind of stabilize this whole thing.
I know, but like I said, like the video I did last week, I said, you know what? I understand they got to they had to get a grip on the housing market, especially because of the way the prices are going. But raising the rates now, the mortgage rates are higher, hasn't really done much now, has it? Because of the
Right.
inventory, like people don't care. Like the comment before, from Phantom Games saying house got 120 offers when 150,000 over asking and interest rates are 6.5%. Nobody cares. Nobody cares. They still want the house. They need a house to live in. So raising the rates it didn't do anything. It really didn't.
No, you're right. And you can make the argument if rates drop to 5%, we just now have triple the buyers coming in the market, not necessarily more
Yes,
inventory.
but the hope is the inventory will come back up because then those golden handcuffs could be loosened and people will feel comfortable, like you said, they'll feel comfortable to trade up. But who knows? Well, like I always say, if your house is worth so much more now, you're going to have that much more money to put down on the next property because of what
Right.
you've earned on your current home, right? So, you know, it's almost a wash, I guess. I don't know.
If
I
you're
don't,
downsizing, it's a great time to do it. I think
yeah,
what's really hurt, as we've all seen, is it's kind of that step up buyer.
yes,
That's
that's
what
the
we lost in
problem.
the marketplace. So it's not freeing up enough first time home buyer inventory because
Yep,
no one's stepping up.
exactly. And I've said this all the time. The only inventory I've seen over the past few years is people moving out of state, investment properties, or it's an estate. The person is deceased,
Mhm.
and that's how you were getting houses. It's just really frustrating. Um,
I think one thing I could add to inflation, Jackie, I'm really from the school of the only thing that's going to slow down inflation is people need to stop spending money.
Yeah.
because it's really the domestic spending. Last quarter's report on overall spending, when you weed out the inflation factor,
Hmm.
it went from a 3.5% increase to a 4.2% increase.
Oh,
So
wow.
people are spending more money and more money, even factoring in the inflation component. And the reality is, inflation, from my perspective, it's a product of supply and demand. If people still are buying tuna fish and there's a shortage on tuna fish, the cost is going to continue to go up. And that's what you're kind of seeing in the marketplace right now.
Right. But I mean, do you think it's because I totally see what you're saying there, but but people still need to buy stuff to live. I mean, if that's the prices are higher, this is why I mean, they still have to get it, right?
Yeah, they
So
do.
it's not like, I don't know. I mean, I don't see, I can't really speak to it, but I don't know if I see too many people going out there buying like major luxury items, buying cars and things like that, or luxury car. I don't even know how the auto industry is doing right now, to be honest with you. But I think those luxury things, um, that's, I think people just need to like put a hold on that.
The luxury, the vacations, people are continuing to go on. I mean, I'm not judging it. We all do it, right?
Right, right. I mean,
People
people
just
still want to
continue.
live, right? They want to enjoy their lives. Speaking of vacations, I'm glad you brought that up.
Mhm.
So we own a vacation property down in Delaware. Last year, the place rented no problem. This year, we're having a problem. And a lot of other short-term rentals in that area, even down the Jersey Shore, I'm seeing
Hmm.
people, they're having problems getting the properties rented. Now, number one, I think is because Airbnb, the Airbnb market is saturated, right? Because a lot of people bought these second homes during COVID, and there's so many available now. Not everybody's getting their places rented. And number two, I think it is because of the economy.
Hmm.
People we've had to reduce our rent price. I'm fine with that. But you look at places in LBI, Cape May, even Cape May, I'm still getting emails from real estate companies down there that there's still availability. There's all these homes available
Hmm.
for vacation rentals. That in the 23 years we've been going down there, I've never seen that. Like, you have to book your house by January or you're not getting you're not getting a vacation home in Cape May. Now there's so much available. And
Yeah, that's a great point. It could be a sign of things starting to
it's a
change a little bit in the
sign.
economy. Sure.
Or it's a sign that people are trying to pull back on that. Or my girlfriend, who's a real estate agent in Delaware, she thinks is that now we're past COVID, people are taking like big vacations, like getting on a plane and going to Europe or to the Caribbean or something like that. So I don't know. I don't know. It's really interesting. But when you're seeing it, like being in it in the moment, I'm like, oh my god, we had
Mhm.
no problem renting this place last year. What in the heck is going on? And then when you see other people having the same problem, like, oh god, you know,
One of the weird things that have happened since Airbnb has become so popular, because I live down in that shore area,
yep,
is a lot of towns have come in and said there's no short-term rentals. Like, if you're going to rent a property, you have to rent it for a month. And it's a way that they've went about combating Airbnb, because these local
okay,
towns down here, people that own the properties love Airbnb. The community doesn't, because you
oh,
got
I get that,
different people in there all the time.
yep.
And like, I think Spring Lake's an example. I think you have to rent for a month now.
Oh yeah, Spring Lake for sure. Yeah, my sister-in-law lives there. Yeah, definitely. If you can't, it can't be weekly anymore.
Right.
But those towns like, like Cape May, Wildwood, those places where you do the weekly rentals, and even like around the beaches in Delaware, they're weekly rentals, you know, it's I mean, it's a lot cheaper down there compared to the Jersey Shore. That's why I was so surprised.
Right.
I'm like, why? Why aren't people renting? So
Mhm.
anybody wants to rent a place in Delaware, let me know. Anyway, so if you haven't booked your vacation yet, let me know. So John, we got a couple more comments here. Another one from we got Brian. Sorry. Hello, Brian. Will the feds be able to reduce the inflation to 2% if the rent or housing price doesn't come down? I don't know, Greg. What do you say to that?
Well, I think it depends what kind of inflation you're looking at, because this is where the whole system is. What do they want to feed us as the American people?
Right.
So, in some of the index or indices they throw out there, they pull housing out of it, or they pull oil out of it to kind of measure that core rate. But the overall inflation rate to get down to 2%, if you put in housing in there, I think that would be a challenge to get down to 2%. And they're saying now that probably doesn't happen until sometime next year.
Well, you think they would? I don't know.
The thing I thought too, now the prices are up.
Yeah.
If all these big companies are publicly traded, and now you have your revenue coming in. So if you've established your price of your good from $8 to $11,
yeah,
are you ever going to reduce it? I don't know that you will.
No.
Or are you going to keep the profit margin as the cost of goods start to drop? It'll be interesting to see how that all plays out.
Right. Yeah, it would be. We have another comment here, Johnny, from Bob. Bob Curran, hi, how are you? Is using cash a better way to buy? Cash is king. If you got it, that seems to be the go-to. I hate to say that, I really do, but cash is king. And the sellers are still fearful of the appraisals, which we have not had an appraisal issue in a long time, and that still comes up. As a matter of fact, funny story. Showed an investor client of mine a property last week, and they were putting a substantial amount of money down, but they also were going hard money loan on the rest of on the balance of it. And the real estate agent was like, "Yeah, we're not dealing with hard money." I'm like, "Why?" She's like, "Too difficult. They're too difficult to deal with, and they're very strict on the appraisal." I said, "Wait a minute. I've worked with this particular one before. It's never been a problem. When has an appraisal been an issue? Unless you feel like you've grossly underpriced it and you're gonna, you're hoping to really jack the price up. It shouldn't be an issue." So I don't know. What do you say about that, Greg? Do you think appraisals are still a problem? I don't see them as a problem at all.
No, I haven't seen a problem with them at all.
Yeah. Yeah. It's funny. Sellers still have that in their head. Yeah. And I think us as real estate agents, like, look, we have to give the worst case scenario, right? When we're representing a seller, we have to tell them, like, this is what we have to look for. And when if somebody's bidding way over the asking price, you have to, a lot of them are still asking to waive the appraisal. A lot of buyers are still doing that. But we got to be careful in how we present this, because it's putting that stigma in their heads. And then they go and tell their friends, you got to be careful, it doesn't appraise. If that's an appraise, the deal's going to fall apart, and all this stuff. But it hasn't happened. And I don't think we're going to see that. I don't think we're ever going to see a problem for quite some time with these homes appraising, especially here in Jersey. I mean, other parts of the country could be a different story, because I know there's a lot of markets that the prices have come down, but not here. So, I mean, do you agree with that, Greg?
I agree with you on that, Jackie. And so much of it is just education based anyway, because if you have someone putting down, if you're buying a house for $1 million, and you're putting down 20%, you're borrowing $800,000.
Yeah.
If the property under appraises for even $900,000, well, you can still borrow $800,000.
Yep.
And all that changed is you went from borrowing 80% of the value of the property to, say, 90% of the value.
Exactly.
Of the property. Right. I haven't seen an appraisal actually kill a deal in years. It's been a long time.
No, me neither. And I would say, and it's never killed a deal. The last time it happened to me was probably 4 years ago. And we just, did we renegotiate? No, we didn't renegotiate the price. Actually, the seller was like, they were hard on their price, and the buyers ended up paying PMI. They just said, okay, the heck with it. They'll pay PMI for whatever, 5 years, whatever the plan was. But it's just funny that here we are 3 years into this, and these appraisals are still come to the forefront to people's minds. Like, oh, my deal's going to fall apart if it underappraises. Oh my God, it's not going to underappraise. Anyway, hey, John, could you bring up that other comment? Okay. This one is for you, Greg. I picked this one out specifically for you. Somebody commented on this. This is on the video from last week. It would help if mortgage loans were assumable or portable. Assumable would let the buyer step in the shoes of the seller with the low interest rate mortgage loan to help the new buyer finance the purchase of the home. Portable would let the seller apply their existing low interest rate mortgage loan to finance their purchase of a different home. But I don't know how lenders could be encouraged to turn existing mortgage loans that aren't assumable or portable into loans with these features. I thought this is an excellent comment. Greg, what do you, as a lender, what do you say about that?
So the first thing that I would say is some loans are assumable. So an FHA mortgage is assumable,
Right,
and a VA loan is assumable.
right.
So, and I just ran that situation the other day. It was a VA mortgage, and the buyer's coming in. They're going to assume the mortgage at the low interest rate, and they're going to make up the difference between the amount that they owed, the mortgage they assumed, and the purchase price. They're going to make that up in cash.
Okay.
So in the actual numbers were the $600,000 purchase. The current owner of the property had a $450,000 VA mortgage at 3%. The
Wow.
buyer came in and said, I want to assume that mortgage. And they were able to assume that mortgage, that $450,000 mortgage at 3%. And then they came to the closing with $150,000 to make up the whole $600,000.
Wow.
So you can do that for an FHA or for a VA mortgage.
Okay.
Now but it isn't just a transaction where it's between buyer and seller. So you still have to go through the VA, have your income checked and everything like that. So they're going to validate the fact, FHA or VA will validate the fact that you can afford the property. On conventional mortgages, so Fannie Mae, Freddie Mac, any real jumbo mortgage, you cannot assume those mortgages.
Okay. Okay.
And it's one of those things you'll probably never see happen in the banking industry, because if you're behind the scenes, all these loans they're all sold behind the scenes. Fannie Mae, Freddie Mac, private investors. But if you're a bank that has loans at 3%, and now the current market is yielding 6%, you're really hoping that you don't have that forever, right? And for you to let someone else assume that mortgage, you would lose a tremendous amount of money in doing that.
Okay.
So from a consumer, it'd be great from a consumer standpoint.
Right.
It would be very toxic for what goes behind the scenes in the mortgage industry.
Gotcha.
Because mortgages are really a commodity. So
Yeah.
they trade on something called the mortgage-backed securities market. It's a bond market. So kind of like the stock market, except it's for mortgages.
Yeah.
So it would create a lot of havoc in that arena.
Okay.
But if you have someone selling their house and it's an FHA or a VA loan that the current owner of the property has, the buyer can assume that.
That's pretty cool.
Oh, it's fantastic.
That is really cool. So let me ask you then, if it's a VA loan, the new buyer, do they have to be a veteran to?
They do not have to be. No.
Oh, really?
So now if I'm selling the house and I have a VA mortgage and I have 3%, boy, what's the value of my house? Got to be worth more money, because I can give that buyer a 3% interest rate for the balance that I owe on the property.
Holy cow. That's crazy.
Yeah, it's a great loan.
Oh my God. I would say more people need to know about this, That's now what's that comment though? He said portable loan. Is that would be the same as assumable or no?
Yeah, I think by portable, it's really the comment of you can give it to somebody else.
Give it to somebody else, right?
Same as assuming it.
So that's a shame that you can't do that on conventional loans, but
Yeah.
I understand it. I get it. But meanwhile, a government backed a government program, sure,
Right.
why not?
And you know what? So in conventional mortgages has really never been assumable. And it's because of what goes on behind the scenes as to how it's a commodity being bought and sold.
Exactly. Okay. So say I'm going to assume that VA loan, you're still going to go through the whole process again, like with getting a loan, right? With going through, obviously you're going to do the credit checks, submit all your documents, and they're going to do an appraisal, all the things, right? It's going to be the same thing.
They're going to do all of that, Jackie. But who's out of the loop in that is someone like myself. So once it's being assumed, it becomes between the bank, the owner of the property, whoever holds the mortgage, in the seller, the buyer, and the lender.
Gotcha.
The direct lender.
Okay. Got it. That's really interesting. So, all right, John, we got another comment from Phantom Games. Why don't builders stop building huge homes and start building more compact ones? That's a good question. That's a
I'm
really
with you,
good.
Phantom
I
Games.
know. Enough of the McMansions, right? I mean, my God, I was like, look, I love looking at homes. You know, when I'm driving around, especially up here in Bergen County, there's some big, beautiful homes that are being built in Hohokus. Oh my God, just gorgeous. Oh, by the way, I was speaking of Hohokus. Remember on your podcast, was it the Hohokus Inn we were talking about?
Yes.
I was there Friday night and I wanted to find Richard Nixon's chair.
That's great. I was married there. I was married in the
That's
Hohokus.
right. That's right. I remember talking about Richard Nixon.
Yeah.
I'm like, oh my God, forgot about that. Anyway, but yeah, why won't they build? So, you know, it's, yeah. Well, here in Jersey, that's hard to do. I mean, like we were saying, it's so densely populated. There's no land. But in other parts of the country, they are talking about builders are now moving over and building multifamily units, and building like apartments or condos. That's that's becoming more popular. But like affordable homes, smaller homes, I so agree with you. That totally needs to be done. It's just outrageous. So speaking of, I don't know if you're familiar, Greg, with this YouTuber, Mr. Beast. He's like the
Yes.
biggest.
Yeah.
Okay. So Mr. Beast, guy's got like 1 billion followers. I just read last week he bought in North Carolina like an entire neighborhood for his family and his staff. Bought all the houses. Bought all the like,
Good for him.
but you know what? Can you save some for the rest of us, for the love of God? I mean, come on. Really? Like,
Right.
somebody else wanted to buy that house, you know? I mean, we're all waiting in the wings, and he comes in with this pile of cash and said, I'll take it all. Like,
Right.
no, go away. Go away. I
You
mean,
know, and that kind of goes back to the big and small house thing. Like I'm a big proponent of build smaller houses because you
yeah,
can smaller lots, just fill the
right.
need that we have. But the reality is there's a lot of people with a lot of money
Yeah.
in this part of the country and
Yep.
they want big houses.
And that's what they want.
Buy
That's what
them.
they want. Oh my God. I could not even like, I mean, I think the house I'm in now is too damn big. I can't wait to downsize. It's too much. It's too much. Hey John, Bob Curran had another comment. I just want to verify this. Bob says, so I am not a veteran yet. I can get a VA loan. You can assume a loan from a veteran. Like you couldn't go and get a VA loan if you're not a veteran or in the military.
Right.
Right. Okay. Just want to clarify that. So we got Mr. Beast buying up neighborhoods in North Carolina, taking homes from the average Joe. I don't know, Greg. Do you think I should do a video about that? Calling them out.
Well, you should tag them in it.
I know. I don't know. I could get a lot of hate for that too, you know, from his like 10 million fans. Oh my God. It really bothered me. It really, really bothered me. Like, dude, do you know what's going on right now? You had to buy for everybody. Like, right. I don't get it. But anyway, so as far as what you're seeing in the market, like how are loan applications going on for you right now? Like you said it's like it's been a lull right now.
There's been a little bit of a lull over the course of the past couple of weeks. I've seen it slow down a little bit, which is unusual for this time of year. You start seeing it pick up this time of year. So the people that are pre-approved that have been in the market for a while, they're staying in the market, but we're not seeing quite as many new people coming in.
Yeah. Yeah. And
people
you know
get
what?
frustrated.
But it's coming. We're coming to the end of the spring market. I mean, let's face it, by beginning of June, it's like, especially here in Jersey, it's like everyone's off to the shore. No one's looking at houses anymore. And it's just like it slows down. Then it picks up again a little bit like end of July, August. But I would say the official spring market, it's going to end. It ends in 2 weeks or a week and a half. But no, 2 weeks. I'm sorry, Memorial Day. God, what day am I on?
And it almost feels like it wasn't even here.
Right.
Right.
It never it never happened. We had no spring market this year. None. I mean, the inventory, I've never seen it that low. I said this last week in my town where typically in a normal market, we would see between 80 to 90 homes. We were down to like 18 homes active, just single family homes. And then I would say maybe there was like 10 to 12 townhomes and condos. Unbelievable. Never, ever have I seen that. But who knows? Who knows? John, I'm sorry. Another comment just came up. What's your thoughts on the home price appreciation in Irvington, Newark, and other big parts of Jersey? I don't know, but I got to tell you, if it's affordable, like I see a lot of investors going down there in those areas now and buying. I have an agent in my office who works with a lot of investors. They own a lot of properties in that general area, Passaic, Patterson. I'm seeing a lot of that. Will they appreciate? Look, they always appreciate. They do. And Newark, some parts of Newark, it's not bad. They are trying to clean that up and make it, make it more of a better vibe, but I don't know. I can't say for sure. Let me see. Yeah, I see you also said you've seen the price increases in the bad places to live. Newark and Irvington is insane. Yeah, because Newark and Irvington, the prices are still affordable. And again, once you're in that price point, anybody that comes to me and says, "Oh, my budget's 350 to 400,000," yeah, that's not. I cringe because it's like you're not gonna. I hate to be the downer, but like it's gonna be a struggle. It's gonna be a struggle because those are the ones that the investors are scapping up. Just being honest, if you got the cash, that's what they're spending their cash on. So it's my 2 cents. That's my TED talk. So anyway, but so do you think, Greg, rates are going to come back down at the end of the year? We're going to stay where we are now?
I think they'll come back. I think they'll come down a little.
Yeah.
Between now, as soon as we start really talking about recessionary trends, and no one wants to talk about anything bad as far as the economy is concerned.
Right.
We start to see unemployment tick up a little bit, a little more recessionary. I think we'll see them come down a little bit.
Yeah. Yeah. I hope we get down into the 5s because that's it. Yeah. That'll help. Yeah. Well, it'll help on the sell end.
And we're about 8 months into it now. So this has been a pattern now for the past 8 or 9 months where rates have been in the 6s plus. So yeah. I think we'll start to see them trend down a little bit.
Okay. I hope so. And let's just hope the government doesn't default and we hit 8% because then we're screwed. And let's just all pack it in and, give up our careers because we're done.
Oh, it's going to be terrible. Terrible.
I know.
I always wanted to own a coffee shop or a car wash. So there's still time. Maybe a car wash with a Dunkin' Donuts in it.
There you go. There you go. I'm trying to come up with my next career because this is kind of scaring me right now. But it's all good. It's all good. I mean, as long as the government behaves and they do what they need to do and pay their damn bills like the rest of us, we'll be okay. So that's my thought on that. Anyway, so we are almost at an hour. Greg, this has been amazing. I so appreciate you being here.
Oh, thanks for having me.
Oh, I'm glad you came back. It's always fun having you here. If anybody would like to contact Greg, if you have any mortgage questions and you're looking to get a loan, please reach out to him. I'll have his contact information down below on the description box in this video. Check out his podcast, Your Mortgage Process. Really great stuff. He does an awesome job, gives really good information. You will learn a lot. Trust me. Speaking of podcasts, you all know that now I have started a podcast. I now put this live stream out on a podcast the next day. So if you miss me on Monday nights, don't worry, you can catch me the next day and you can hear me play it in the car while you're working out. Just you get to hear me then. That'd be great. I'm sorry, Phantom Games, one more thing. The government cannot pay debt. It's like 120% of our GDP. Yeah, okay. I'm going to breathe. Anyway, so on that note, I wish everybody a wonderful week. And I thank you all for being here and all the comments. And if you're new here and if you're watching the replay, feel free to subscribe because you really like to be part of this community. We're a lot of fun. All right, everybody have a great night. Greg, thank you again for being here.
My pleasure. Thanks for having me.
All right, and I'll see everybody next week. Have a great night.